Hi CA students, let's revise CA Final AFM Chapter 8 Mutual Funds Practical Question 9. On 1st April 2009, Fair Return Mutual Fund has the following assets and prices at 4 pm. They have given the list of shares wherein the mutual fund scheme has invested, and the number of shares are there and market price per share is there. The requirements of the question are: calculate the NAV on 1st April 2009. And as we can see, this is the same exact question as per same as this practical question 8, wherein they have asked the NAV and then some assumptions, some new investment, then again revised NAV, revised position. Fine. NAV of the fund on 1st April 2009. So which is a simple multiplication of the shares with the market price will give us the net asset value, then dividing it by the number of units will give us the NAV per unit. So that's what they have also done here. This is for A Limited, so 10,000 multiplied by 19.7 is 1,97,000, then 50,000 multiplied by 482.60 is 2 crore 41 lakh 30,000, then 10,000 multiplied by 264.4, then 1 lakh multiplied by 674.90, then 30,000 multiplied by 25.90. So the summation of this divided by the number of units will give us the NAV of the fund, which is nothing but 119.05. This is as on 1st April 2009 at 4 pm. Now going to the second requirement. Assuming that on 1st April 2009, Mr. X, a HNI, send a check of 50 lakh to the fund, and the fund manager immediately purchases 18,000 shares of C Limited and the balance is held in the bank, then what will be the position of the fund? So they have invested 18,000 shares of C Limited. So previously C Limited has 10,000 shares, now 18,000 will get added. Now this the value of the share is 264.4. So 18,000 into 264.4 will be 47,59,200, and since the investment is around 50 lakh, so the balance amount is kept in bank, which is nothing but 2,40,800. Hence there are two assets added to the mutual fund. One is C Limited shares of 18,000 shares, and then cash of 2,40,800. This will be added to the funds. Now adding that will give us a net asset value of 10 crore 2,38,000. Then we need to find the revised number of units, which is nothing but the investment 50 lakh divided by the previous NAV, which we found is 119.05. so which is 50 lakh divided by 119.05 is 42,000. so 8 lakh plus 42,000, 8 lakh 42,000 is the revised number of units of the mutual fund. Unless the market price of the shares are increased, the NAV of the fund will remain same even if the new funds are introduced. Hence even if you calculate, the NAV will be same. 10 crore 2,38,000 divided by 8,42,000 is coming up to 119.05, same as the previous one, since there is no increase in market price only. Now that's it. Now the third requirement is, now suppose on 2nd April 2009 at 4 pm The market price of shares is as follows. So they have given the revised market price of the shares. Now the current funds, if we multiply it with the revised funds, we'll get the revised net asset value. Now that divided by the which is coming up to 10 crore 27,87,200. So there is a change from the previous funds, the previous net asset value to this net asset value. Almost around some 25 lakh something it has increased. So this 10 crore 27,87,200 divided by the number of units, which is nothing but 88,42,000, will give us the revised NAV per unit as on 2nd April 2009 at 4 pm. So 122.075 per unit is the revised NAV. Thank you.